Hi, my name is Muhammad Mirul Haziq bin Azman. My metric number is 277087, and today I will present the introduction of YTL Corporation. YTL Corporation could be a Malaysian infrastructure conglomerate founded in 1955 by Yeo Tiong Lei. Tan Sri Datuk Seri Dr. Yeo Tiong Lei founded YTL Corporation in 1955. Tan Sri Datuk Dr. Francis Yeo, his eldest son, became a core maker at YTL Corp in 1988 and later became executive chairman in 2018. The YTL Group has grown from one listed entity in 1985 to all or any of these 5 listed companies with a combined capitalization of 29 billion ringgit and total asset of 77 billion ringgit, with cash reserve at 12 billion ringgit, and also has been listed on Tokyo Exchange since 1996, allowing this the primary Asian non-Japanese company to try to do so. The next one is company's background. First, objective. The YTL Corp seeks to diversify its geographic footprint and expand its revenue base through greenfield developments and strategic acquisition, both domestic and international, focusing on regulated utility asset and others. The next one is dividend. YTL Corp declared a 1/430 share dividend with entitlement date of 28 October 2020. This figure represents a dividend yield of about 3.3% based on the average share price for the year of 89 cents per share. The next one, under the YTL Corporation, there is a business such as utility, cement manufacturing and trading, construction, hotel operation, property investment development, management services and others, and IT and e-commerce related business. Lastly, the outlook. The ongoing COVID-19 pandemic has significantly dampened the global growth prospects, and the outlook is highly dependent on how successful countries around the world are in containing the pandemic. The Malaysian economy will expect to grow between negative 2.0% and 0.5% for the entire 2020 calendar year, owing to output losses, the effects of the MCO, and commodity supply disruption caused by the pandemic.
Now we move to financial ratio analysis. It is calculated using numerical values from financial statement to provide useful information a company. So we decide to use a total of 10 financial tools, which is including current position analysis, to account reserve analysis, a ratio of liabilities to stockholder equity, and 4 probability analysis to make financial analysis for YTL Corporation Berhad Company. Firstly is a working capital. It's referring to the gap between operating current system and operating current liabilities, and is a measure of company liquidity. From this table, we can conclude it has been on the downside. Because of the present liabilities, the working capital has changed significantly. The increase in current liabilities is due to higher borrowings, which has a strong impact on working capital. To ensure that the company can survive the financial crisis, YTL should keep its working capital at a consistent level. Secondly is a current ratio. It's explained to investor analysis how firm may use current asset on its balance sheet to pay off current debt and other obligations. From the table, the current ratio seems to be on the downward trend. From that, the company ability to repay current liabilities with current asset has decreased as the current ratio has decreased. To ensure that the company can pay back its current liabilities, the company should maintain its current liabilities at a constant level. Next, the current ratio is measure of a company capacity to satisfy short-term obligation with its most liquid assets and is an indicator of its short-term liquidity position. From the quick ratio, it shows an increasing trend from 2019 to 2020. The higher the ratio, the faster the current asset can turn in cash. It is a good sign for YTL Corporation because the quick ratio has increased due to the increasing of borrowings. Now we go to account receivable turnover. The ratio is used to assess a company capacity to efficiently extend credit to consumers and recover cash from their own time. From the table, it is increased from 2019 to 2020. This shows that the debtors can pay back their debts. This means YTL is efficient in collecting the debt. Therefore, maybe a company YTL will give a discount so the debtor can pay back their debts easier.
Hello, my name is Sabrina Alia binti Kamal Ruslan. My matric number 279934. For numbers of days sales in receivable, it shows a decreasing trend from 42.7 days in 2019 to 40.4 days in 2020. This means that YTL can easily collect back the debts. The decrease of the ratio is caused by the decreasing credit payment. This problem will not bring risk to the company because the company doesn't need. It may cause the allowance of doubtful debt. This is because YTL doesn't need to spend more time to collect back the debt. Maybe the company give a discount to debtors to pay back their debts. For the debt equity ratio, it shows an increasing trend from 4.2 in 2019 to 4.4 in 2020. This means that most of the assets of YTL are contributing by payable instead of shareholders' equity. The high debt equity ratio places the company in a high risk financial position. This is because the company will be facing serious financial problems if the company is unable to use the assets to generate the profit. Therefore, the YTL company should sell off part of the assets and pay back part of their debts. During the 2019 to 2020 period, the profit margin has increased from 0.01 to 9.91. This means the business is getting better at controlling its overall expenses.
Hello, my name is Nodiana Izzati binti Muhammad. My matric number 276AA4. During the 2019 to 2020 period, the gross profit margin has decreased from 0.14 to 0.199. This is because getting work at controlling its cost of goods sold. From the table of ratio sales, we can see the ratio is quite high. For 2019 is 1.6, while for 2020 is 1.7. So, YTL Corporation may increase their asset investment to ensure they can sustain in these industries for the future. Return on total assets for company YTL Corporation will still maintain 3% in 2019 and also the same in 2020. This shows that company YTL can manage its asset effectively over time. Based on our evaluation of YTL Corporation's performance, we discovered that his corporation performed well in 2019 and 2020. The ratio analyst also revealed that his corporation performed especially well, with almost all of the ratio analysts being positive. However, in comparison to the previous year, 2019, the company performance is declined in several areas, but it is still acceptable because the economic pressure is very high in the current year 2020. We think that YTL Corporation has high potential business in Malaysia, even though the economy may have negative effect, and the investors should hold their investment, as we think they can overcome the pressure and increase their performance in the future.